All right, guys and gals, back again here, Joseph James. It's noontime, Eastern Time. Happy Tuesday, or should I say happy Super Tuesday today. Now, before we get started this morning with our weekly wrap-up, our daily wrap-up, I do want to remind everyone here, thank you, by the way, for sitting around with me today. Thank you for the members and the guests for sticking here with me this morning as we went through this sloppy, choppy Super Tuesday morning. I do want to remind all the members and the guests this morning, this material is for educational purposes only. I want everyone to remember to be careful out there with risk capital. It's easy to lose money in trading, no matter what type of trading strategy you're using. If you're not paying attention, if you're not prepared to manage your risk, if you're not educated on all the little things we do, looking for the right times of the day, the right patterns, having enough room, making sure entry rules line up, and making sure that fits inside of your trade management strategy. Every single trader is different. One size does not fit all when it comes to day trading. And when it comes to teaching you how to trade, I want to make sure you guys remember, everyone's going to come in and get a custom-fitted trading plan from me. I've got members right now that have 2 days of experience. I have members right now with 2 decades of experience. Everyone's different. Everyone will start in a little different spot. And once again, remember, as a member, I'm going to give you that trade plan. I'm going to give you the specifics you need to trade with me every single day according to your trade plan. This is not intended to be a trade calling service. Our goal in this trade room is to reinforce the materials we've already been learning every day in our training through doing and repetition in our trade room with our members. So just be careful out there, guys. There is risk out there in these markets. Please speak to somebody you trust regarding your risk capital. And let's get a little review going on today here. Had a good Super Tuesday, right? It was a decent Tuesday. Now, we began the day today, again, knowing about the fact that we didn't have any major news this morning. So first clue this morning was this. First clue was no major news. We had some CAD news to worry about, but the first clue this morning was no major news. And without any major news, we always know things are going to be a little bit sloppy. Well, then we realized there are, a dozen elections today all over the U.S. for the Republican primaries. Okay, all of these Republican elections happen on Tuesday, Super Tuesday. So there are a dozen elections going on all over the country today. And we had to assume that that would be a little bit of concern on the minds of day traders, whether or not they're going out to the polls and voting, or whether or not they're day traders themselves and they're thinking, boy, we may have some sloppy markets because of it. I'll sit on my hands. And then if you go back to our morning prep this morning, okay, hindsight obviously is 2020. I'll go all the way back to the morning prep. And the morning prep this morning, we posted what we call our heat map. And our heat map gave us the second big clue. Okay, the heat map this morning said, wait a second, you've got a lot of red here. And red means there's no volatility, right? There's nothing moving. We had a little bit of green, and that means, yes, there is something moving there, but that was the second clue. First clue was no major news, Super Tuesday. Second clue, the heat map this morning said, be careful. We are not seeing a lot of relative performance. That means how much volatility, how much range are we getting here? Now, that heat map's not going to be very good minute by minute, but it will be an excellent big picture clue that we're looking at some sloppy sideways markets. And, of course, the third clue. The third clue we got came from the markets we traded. We began on the dollar. And, again, I'm not a big fan of hindsight, so go back in, look at your dollar. Here's your dollar prep. And what did we find in our dollar prep? We found the dollar prep, again, this was covered at 7:30 this morning. On the dollar prep this morning, we found, again, the bull channel. So we knew there was a slight bias for prices to be dropping. We also saw, though, that short-term directional bias going higher on the dollar quickly stalled and began to go sideways. When the dollar went sideways, we no longer had a directional bias. So we had a slight bearish bias today on the dollar. It was above the previous highs in a bull channel, and we had higher highs and higher lows for most of the morning the dollar. It wasn't until mid-morning when it flattened out and went sideways. So the third clue we had this morning was the dollar index. The dollar index, again, moving higher, gives us a directional bias that tells us to go short. Third clue was a big one for us. It quickly turned into a sideways dollar, and that quickly resulted in sideways markets everywhere else. Now, the concern we then had was on the crude. Crude oil was a really easy trading strategy. Here was my trading strategy on crude. We had a price wedge. We had a double top. And we had trigger zone support. So we had a couple different things here on crude. This is our fourth clue. And this ended up being one of the more challenging parts of our day. Remember, the dollar had a correlation, dollar moving higher. We were expecting crude to fall, gold to fall, euro, Russell to fall. Well, much like the gold, the euro, and the Russell, the crude oil had some significant levels of support. We draw trend lines. We draw trend lines. That's your wedge. We had a crude wedge. What do we always talk about when it comes to trading wedges? Fade the breakouts. So as price falls, we wanted to be buying. But wait a second. Didn't we just say we have a directional bias from the dollar that says go short? Isn't that higher risk? Absolutely it is. So that's exactly what we talked about this morning was that, guys, this is going to happen sometimes. We see this happen every 2 weeks or so. That's when the dollar is moving higher. And again, remember, we're just lonely old day traders. I don't have a team of analysts. I don't have a Warren Buffet to give a call and ask for help. All right? I can't call Mr. Bernanke and see what he's up to this afternoon and ask him why the dollar is rising or how far it will go. Okay, as lonely old day traders, we have to trade the reaction. And we have to make sure that we limit our exposure to higher risk trades.